Hello, everyone, and welcome to another edition of the Forex Technical Market Update for September 29th, 2015. And what I have in front of us, it's good sometimes to look at the monthly charts. And what I have in front of us is a monthly chart of the euro versus US dollar. And let me just highlight this area. This is a price action over the last couple of months. 1, 2, 3, 4, 5, 6, 7. This is the 8th month of the euro versus the US dollar doing absolutely nothing. And I know the theme over the last couple of days is about really patience when it comes to trading. And I was speaking to a trader yesterday, and one of the challenges he said he was having is that he's very impatient and he wants the markets to move and wants the markets to act now. And this type of situation is an example of a market that does what it wants to do. Just remember, you do not control the markets. The markets does what it really wants to do, and you have to adapt to the current market environment. And when you have a market environment that nothing much is going on in terms of the euro versus the US dollar, and even if we look at the monthly chart of the US dollar index, as you can see, one of the reasons why the markets aren't trending very much is because the US dollar index is not really doing anything itself. I mean, it's stuck in a tight trading range. So we see that the US dollar index is stagnant. And back to the theme, you cannot control the market. The market does what it wants to do. So you have to adopt and wait. This is a market that will test your patience and will test your resolve as a trader. Now, it's not often that you see a market, especially a major, when you're trading currencies, it's not often you see that the market will just be stagnant for this long, especially with the US dollar, because it's always on the move. It's always either trending or retracing, or trending or retracing. It's very rare that you see the markets really consolidate like this for a number of months. The last time this happened was back in 2013, 2014. Taking a look at the US dollar index, we see this point in time here. Let's draw the line. This point in time here, where the market was 1, 2, 3, 4, 5, 6, 7, 8, 9. This was 10 months. The market were stuck in a range, and then, as you can see, once the market broke out, it broke pretty significantly. So if after 7 months you get frustrated with the market, let's say you are seeing this market here, you get distracted or get frustrated, the market breaks out, or you get frustrated and stop paying attention to the market, that's the point where the market will just break out and you will miss this massive uptrend. Remember, this is a monthly chart, so this is a pretty significant move in the US dollar index, moving from the 80 level all the way up to 100. So you cannot fall asleep just because the markets they're not doing anything. You have to keep your guard up, and whichever way this market breaks, if it breaks to the upside, if we see a break to the upside above the 100 level, we could see a pretty strong move. Or if we break to the downside, we could see a pretty strong retracement in either direction, just because the market has been stagnant over the last couple of months. And I suspect, and I keep saying it, I suspect that we're going to break this malaise fairly soon. Okay, digging deeper into the other currencies, we see the British pound. The British pound versus the US dollar is testing support in this 150 area. It seems like it wants to break the support at 151, but just cannot seem to close below that area just yet. If we see a break below this 150 area, or we could see a move down to 149 and also 146 with the British pound versus the US dollar. Taking a look at the euro versus the Japanese yen, this is a market that is also moving sideways. Let me just redraw this area of support. We have support roughly the 133 level. This 133 level, give or take, is acting as support. Yes, the market did dip down below it, but it snapped right back up. So this 133 level is acting as support, and a resistance in the market is currently comes in at 138. So this is a market that's also moving sideways. The only market that's advancing currently is the USD versus the Canadian dollar, where we see the market made a new high this morning but is pulling back slightly. This market has pulled back slightly and is currently not, and could be forming a doji pattern. Taking a look at the British pound versus the Japanese yen, market is approaching the low that was made back in September. There, this 180 handle, and we could see, and this area represents the. Let's draw the Fibonacci retracement from this to the high. This is around the 68% retracement level, around this 182, 180 level. The 786 retracement level comes in at 79.45, and we could well see the market move down to that level. Another currency that is just in a stubborn triangle is the USD versus the Japanese yen. This consolidation is lasting just over a month now, but the market spiked down in response to the stock market selling off. Market spiked down, recovered, and it's just meandering in a triangle. So we want to see the market either break up or break down, and then we will act at that point in time. So the moral of today is not, do not let these markets bore you just because they are not moving yet, because when they start moving, the moves will be fairly strong, and we could see some rapid trends in the next couple of months. If you'd like to take advantage of those trends, our system is designed as a trend trading system that takes advantage of trends. So it's a good point in time to get in before the trends emerge, because when the trends do start, they can move quickly, and that's where the profits will rack up. So if you want some more information about the signals, you can click on the link below this video to get started. And I hope you all have a wonderful day. And remember, do not get bored with the market action. Activity will pick up soon. Thank you very much for listening, and have a good day.